Well, they told us it was going to be the worst April since 1932. That didn't turn out to be accurate. They told us that the economy was going to crash under Donald Trump. That has not turned out to be accurate. In fact, the jobs report that came out last week, once again, stronger than expected. Several times in a row that they continue to defy the alleged experts. Joining me now, a real expert, Terry Sawchuk, the founder of Sawchuk Wealth. He's got an upcoming seminar tomorrow at 6. We'll talk about that as well. But Terry, good morning.
Good morning, Steve. Good to see you.
Good to see you. All right, so look, the employment remains resilient, as you say, and the markets are seasonably strong. Looks like that should be true through the end of July. I just looked at the futures for today. A little bit in the green, not much, pretty flat, almost 43,000 on the Dow. We're in pretty stable, a pretty stable pattern here. That's the way it looks to me as an outsider. What does an expert like you see?
Yeah, the market's in pretty good shape for now. I think it's probably going to remain bullish. We've got the jobs report, as you mentioned, came out really strong. The services sector is still very strong. Even the manufacturing sector looks better than what a lot of people thought, given the tariff situation. And so I think the demise of the stock market has been greatly exaggerated to this point.
Yeah, and I look at the price of gas is pretty good. The price of energy is pretty good. Overall, we see pretty. I guess the real question is, what is the Fed going to do? A lot of questions there with Jerome Powell. I mean, inflation, from what I see, is 2.3%. It was much higher when he lowered rates. I think in a political move to help out Joe Biden. I mean, maybe I'm just skeptical, but it seems to me that it was a political move because now would be the time to lower rates, and he has just failed to do so. What do you make of that?
Well, there's certainly no, I shouldn't say no, but inflation has definitely slowed down, right? But the other side to this is that, what you're really seeing, it's stealth inflation in the context of the strength of the dollar. The dollar's held up fairly well so far, but I think, over the long term, the real issue is going to be you're going to have assets that grow at a rate that's far greater than just the pace of inflation, but you have to consider the pace of the value of the currency that you're losing. And so if you have inflation at 2 or 3%, but then the currency value may be dropping by 5, 6, 7%, you got a pretty big hurdle to clear. And Powell, he's definitely not doing Trump any favors. This idea that they have to sit back and wait because they think inflation is still here when it's obviously currently at least not. They're talking about the impact of tariffs and all this what if scenario, but the reality is you got a 10-year treasury that's at 4.5%, and you've got a federal funds rate at 4.33%, right? So it just doesn't make any sense. There's not a big enough differential there. Why would anybody put money in long-term bonds when they can get money markets that are paying over 4%?
That's exactly right. I have a money market for that very reason. If I've got some cash, I just put it over there. I mean, it might as well do something. Your bank doesn't offer you anything anymore. You don't get anything in a savings account anymore. Have not for years and years. It's almost, it's a losing proposition, isn't it?
Yeah, you're not going to get paid to leave money in the bank. It's there for liquidity, right? It's just there when you need it to spend it, if you buy a car, but whatever. It's just that's what it's for. But long term, we're going to see the dollar continue to weaken. It's the only way out, Steve. We've got almost $40 trillion in debt. And the one shot we had was with Elon and Doge, and it's over. They're just not going to, what I was hopeful for isn't going to happen. So the only scenario left is to debase the currency and basically monetize the debt. They're going to drive it eventually, not right away, but eventually the Fed's going to have to, unless we get a radical change, and I don't see it right now, they're going to have to drive the value of the dollar down so that they can pay the debt off and discounted future dollars. And so you're going to have to put your money in assets that are going to grow at nearly double digits just to keep pace.
Otherwise, you're losing money every day. If you're not growing in double digits, you're losing money. So I mean, it's hard to grow at 10% consistently or 12%. I mean, it's a difficult thing to do, isn't it?
Yeah, I mean, there are certain asset classes that are more predisposed. I mean, really, technology for now, it's the only asset class that has the potential to stay ahead of that, just because of all the changes. And you and I have talked about this, Steve. I've said multiple times that the world's going to change more in the next 5 years than it did in the previous 50, and maybe in all of humanity in the next 5 years.
Yeah,
and I think And that was before COVID. We were saying that. I didn't think it could get any weirder, but with all the riots and stupid things that are going on in LA right now, it's just a sign of things to come.
Yeah, it just seems like a lot of made-for-TV drama in a lot of ways. I mean, look, the riots are manufactured by those that manufacture riots. I think the Elon thing was self-inflicted one on Elon, and Donald Trump, I give him credit. He kind of sidestepped that, said, look, I like Elon, didn't give credence to any of the nonsense that was said. So there you have it. All right, tell us about this webinar, coming up tomorrow night at 6 o'clock. You've got a QR code we'll put up on the screen for folks so they can see it. But what is this about?
We're just giving people strategies to protect their money over time. There's two things that you have to do. One is that you have to grow your assets at a rate that's going to be greater than the rate of not only inflation, but the rate of currency debasement. And then you're going to have to save some money in taxes. And if you're a high income earner or even a decent income earner, there's ways that you can actually take advantage of your 401k plan, where you can sort of skirt some of the rules around Roth IRA contributions. And so we're just going to show people some basic strategies to not only protect their wealth, but to grow it and to try to keep Uncle Sam out of their pocket.
All right, and again, if you click on that QR code, you can find out more about the webinar Tuesday night, 6 o'clock Eastern time. Look, it's nice to have some opinions from some other folks, people like Terry Sawchuk. Terry, 20 seconds. I'll give you the last word.
This is it's a time to make sure. I would say don't buy the hype and all the doom porn about the market falling apart and the recession coming. Likely none of that's going to happen. July historically is a pretty strong month, and I think the market's going to push higher until something radically changes.
All right, Terry Sawchuk, founder of Sawchuk Wealth. Sir, thank you as always, my friend.
Good to see you, buddy.
Good to see you as always. Terry Sawchuk. Been contributing to this program for years. He's a voice of reason out there. I will take a break and be right back. It's the Steve Gruber Show.